Nigeria unveils voluntary offshore asset regularization scheme aims to encourage voluntary declaration of offshore assets and tax. Money market compresses to begin this month. Federal government says 2019 budget expected to run at nominal gross domestic product of 139.65 trillion and 3.01% of GDP growth. Thanks for joining us on this edition of Business Express. I am Amina Nujeng. Welcome to the program. The federal government says the 2019 budget is expected to run at a nominal gross domestic product of 139.65 trillion and 3.01% of GDP growth. It noted that other key assumptions of the micro framework of the budget are based on a projection of 2.3 million barrels per day oil production, oil price benchmark at $60 per barrel, exchange rate of 305 naira a dollar and 9.98 inflation rate and 119.28 trillion nominal consumption. Economic Recovery and Growth Plan ERGP also projected oil production at 2.4 million barrels per day, oil price benchmark of $50 per barrel, exchange rate of 305 naira to a dollar, 13.39 inflation rate, 126.36 trillion nominal GDP, and 4.5% GDP growth rate. The 2019 budget presented by President Muhammadu Buhari at a joint session of the National Assembly in Abuja, while the figures were disclosed by Director General Budget Office of the Federation, Mr. Ben Akabweze, during a public hearing on the Medium-Term Expenditure Framework (MTEF) held by the House of Representatives Joint Committee on Finance, Appropriation, Aids, Loans and Debt Management, headed by Babangida Ibrahim in Abuja. Akabweze oil revenue at 2.32 trillion naira, 77% of budget and 64% higher than 2017. Still on revenue matters, the Federal Inland Revenue Service says it's targeting to generate about 750 million naira from about 55,000 million tax debtors. The FIRS Executive Chairman Tunde Fowler said this in Abuja while addressing the House of Representatives Joint Committees on Finance. He said the recent substitution exercise carried out by the service had led to the recovery of 23.25 billion naira. Tunde Fowler, who noted that the FIRS recorded an increase in value-added tax collection between 2015 and 2018, also explained that the service was broadening its VAT collection scope with the adoption of State's Accountant General Collection Platform, among other initiatives. And talking tax, the federal government has unveiled the voluntary offshore asset regularization scheme meant to encourage the voluntary declaration of offshore assets and tax due to Nigeria. Minister of Justice and Attorney General of the Federation, Abubakar Malami, unveiled the scheme in Abuja, along with Minister of Finance Zainab Ahmed. Femi Okewu was there.
The unveiling of the Voluntary Offshore Assets Regularization Scheme is a practical follow-up step to the signing and official gazetting of the Presidential Executive Order 8, which was instituted in October 2018 as part of the federal government's fight against corruption and recovery of assets due to the nation. Minister of Finance and that of Justice explained the modalities for the scheme.
The introduction of VOR scheme has become an additional opportunity, a new mechanism for Nigerians to continue to fulfill their tax obligations by extending the scope to offshore assets and foreign-sourced income.
It is expected that those funds owned by Nigerians that are not in the system will be voluntarily declared by the owners.
Because the target assets are primarily located outside the shores of Nigeria, the federal government is partnering a Swiss consortium to do a spotting and evaluation of the assets. The consortium is headed by Daniel Zefali, who was Switzerland's Attorney General when General Sani Abacha's asset was first frozen.
The state would recuperate in this, with this scheme, we hope, substantial amount of what has been forgotten to be declared.
Call it an amnesty period for offshore tax assets or part of government's stick and carrot approach in fighting corruption. Experts say it's all part of government's determination to mop up all legitimate assets for the nation's economic development.
Today we will be talking about moving Nigeria away from an oil economy, and we have as our guest a business consultant, Dr. Emmanuel Chun Bashaye. Thank you for joining us on Business Express today.
You're welcome.
Now, the oil sector contributes about 25% to the GDP, despite accounting for about 90% of foreign exchange. It's still the highest source of revenue. Now, looking at the federal government's diversification drive, how would you describe the situation?
Okay, so thank you for the question. First of all, I think it's very, very important to understand that the fact that there is a drive for diversification shows that we are really trying to drive the economy in a sustainable manner, because diversification is what drives sustainability. So the question is, how fast and how far is this? If the will to do it is already there, how quickly are we able to ramp up into getting results from this? So we've started this for a long time. The question is, what was the target? Where were we projecting to get to at what time? So it is not just about saying I want to do this. The question is, how do I measure progress? What is the target and what's the measure for this progress?
As far as you're concerned, how would success be measured, or how far the journey?
Okay, so in terms of how you measure success, this is what you need to define. What are the goals? Okay, so apart from oil, I want to do XYZ in manufacturing, I want to do XYZ in agriculture, I want to do in this sector. Now, with these objectives clearly called out, we can now say, okay, with this objective I want to do this in 10 years or in 5 years. Okay. So there's a time frame for what you want to do, and within these periods you measure the progress you make according to across this sector. Now, without mentioning specifics, it's about clearly calling out what success means from the very beginning. Not when you start, you not say, okay, we'll do this, because that doesn't show that you really wanted to get somewhere, just going and coasting along.
Okay, so how far would you say the diversification agenda of Nigeria has gone so far?
So I think there's significant progress, but my question is, I don't know if the person on the street really knows what the target is or what success means. So for example, in agriculture, there has been a lot of drumming around, let's go back to the farm, let's try and do something different from just waiting on oil. So there are programs that the government has brought in, so Anchor Borrower and all the other programs. The question is, what will be success for the Anchor Borrower program? Do you know? That is a question on the street. So if Anchor Borrower program is successful, what is that measure of success? Is it when we have engaged 20 farmers, 50 farmers, 100 farmers across the 36 states of the Federation? What exactly does success mean? So yes, there is significant progress, but there needs to be some deliberate action to say, this is where we want to go to, and this is what it means when we get there.
Okay, we're talking about diversification, and one of the alternatives is non-oil sector. Now, looking at its performance so far, what would you say in terms of the diversification agenda?
So I think significant progress, and the performance is appreciable, but not really where it should be. So today, when you think about manufacturing, for example, I will say there's a level of manufacturing in this country. So we have vehicles being manufactured in this country. Now, to be able to make it holistic, how is this sector supported by both the government policies and as well as the consumers of this service? So if I produce a vehicle in Nigeria, what support do I have to ensure that somebody's going to take this vehicle out of my garage when it's produced? That is what will encourage me to produce more vehicles. So I'm producing one today, I'm producing two. So it's not just about starting, it's about creating the platform where there will be scalability, where we'll take this from 1 to 2 to 3. So yes, some progress has started, but not yet where it should be.
Okay, now let me take you back a little with the global trends in the oil market. How urgent is it to diversify the economy?
It's like it should have been done yesterday. That's how urgently it is. Because like the Hausa man will say, if your house is standing on one tripod, you're on a keg of gunpowder. So starting much earlier would have been the real thing, but it's never too late. I mean, we've started already, it's not like we're on ground zero, but with the dwindling oil revenues, it simply alarms us the more that if we continue to stay where we are only on a path to something that is not palatable at the end of the day. So it's very, very urgent. It requires that need of urgency. So government policies have to have urgency in them to get things spinning at a faster rate, to be able to ensure that we're able to have the backup we need before the day something will go wrong.
Now, why would you say the oil sector is not contributing significantly to growth?
I mean,
it has improved, but there's no significant contribution still.
Yes, that's because, I mean, think about it. The oil sector is more like a plug and play thing. Okay? As long as the oil flows, the money will come. What will only determine how much money you get is the price of a barrel of crude oil, right? So if you continue to bring out fuel and crude oil, you're going to get money. So it is not like there is any anything you're going to significantly do to impact on that. So if you increase your oil output, does that mean, I mean, it means you're going to get more money. But then there are also quotas where you can, there's only how much you can do. So if you exceed this, you can't get this. So there's a pretty much predictable amount of money you can get from this sector. So even if you blow it up and expand it as far as you can, there's only how much you can go. But if these other sectors are able to blossom as fast as they should be, then you see that the reach is farther and the impact is greater.
Okay, earlier on you did make mention of agriculture. Now, in the past we had cash crops, we had groundnuts, we had cocoa, we had palm oil. Now, what would you say needs to be done to make those drivers of the economy bring its glory back to what it used to be? So,
the key thing there is that there has to be a driving force behind a farmer putting those, planting those stuff. Now, if I know that if I have 10 bags of groundnut, I'm going to have a buyer at a good price, then I am motivated to do more. So, the existing farmer, is he having the right motivation to put in energy to do more than he is doing? Is there enough attraction for a to-be farmer to want to go get his own share of this boom? So, I think the key thing is having that guarantee that there is something at the end of it for me. Is there a market for me? Is the market going to be sustainable? It's not like today cassava is selling at a very high rate. I go plant cassava, everybody plants cassava, the next minute the price crashes. And the farmer is, why did I plant so much in the first place when I'm not getting that much revenue from it? So it's about the motivation that is there to encourage more to do. I mean, those that are already there to do more, and those that want to go, they will see a light at the end of the tunnel.
Now, in all of this, where is the place of startups?
Startups. So I think the truth there is that the private sector is going to drive our economy, and that means if we're having more startups who are willing to take the try, the better for us. So startups in Nigeria, to be honest, in most cases people have to bring in their own money, equity and all. So in terms of the programs available that support startups, even if you go to a bank today, you're looking for money on the startup, the bank is not sure you will succeed, and the bank is concerned about whether it will get back its money or not. So the startups would be those places where we can actually put our weight and see how we can get existing businesses or people who are professionals in the industry to mentor them to success. But then we have to also make the effort to take the risk in the first place. Without any venture, there will be no gain.
Okay, looking at sources of revenue, aside what you've already mentioned, we've talked of agriculture.
Okay.
Are there other areas? Recently, minerals, solid minerals has come up.
Yeah.
Are there other sources of, building the economy, making it grow, that Nigeria can look into that right now are taking a back seat?
I mean, there are other areas. You talked about solid minerals, mining sector. Okay. We talk about the entertainment industry, which is growing and generating a lot of wealth as well. Then you think about the manufacturing sector, where we need to start producing what we eat. So think about the fact that I have a tomato farmer in Kano who knows that no matter the quantity of tomato I produce, there is a factory processing tomato into tomato paste. So I can produce and not worry whether it will get bad on the transit or something. So all these sectors, I mean, tourism is there. We have the festivals that happen across the year that attract a lot of people from all over the world. So all these are things that can be done to be able to bring in more revenue apart from just oil.
Okay, your closing thoughts. Diversification for Nigeria, what would that be?
For me, I mean, diversification is the sure way to sustainable growth. We have a large population. That is to say, if we're able to have the right products and services, we have people that can consume it and pay for it. Okay. So as long as we don't open the size of, just like you're digging a pit, if you don't make it wider, there's only how deep you can go. So if we widen it, then there's a chance that we're going to build a bigger pit, even if possible a bigger well or a dam or something. So we have to support ideas that help take us away from dependence on oil into something else that brings more revenue and can affect more lives than just dependence on oil.
Dr. Emmanuel Chun Bashi, a development consultant, thank you for joining us on the program today. It was a pleasure having you.
Thank you so much.
It's a pleasure.
Yeah.
Now for a look at global stocks, let's join Bosede Abel with a summary.
On the global scene, European stocks were higher in early trading as market participants monitored signs of progress in US-China trade talks. Major Asian stock markets closed higher following a report that said the US and China are closer to reaching a trade agreement. The Shanghai Composite appreciated by 1.24% to close 3,216.30. Hang Seng Index gained 1.22% as of its final hour of trading. Nikkei added 0.97% to close at 21,713.21. U.S. stock futures also climbed on optimism over U.S.-China trade talks. American and Chinese officials are reportedly closing in on a trade deal, having resolved most of the outstanding issues in their prolonged trade dispute. In early trading hours, Dow futures were 100 points higher, indicating a positive open of 67 points. The S&P 500 and Nasdaq Composite Index futures also rose. In Africa, stocks were mostly positive. South Africa's JSE Africa Top 40, Nairobi All Share, Tunisia's Tunidex and Namibia Overall Index opened on the rise, while Ghana's GSA Composite Index opened negative.
Meanwhile, at the close of trade this Wednesday, the NSE OSHA index ended on a bearish note. It depreciated by 1.85% to close at 29,668.73 basis point, with market capitalization also closing at 11.1 trillion naira. At the end of the session, FCMB was the most sought after trade, followed by Sterling Bank and UBA. Sovereigns led the gainers table, while Beta Glass topped the losers chart. The International Monetary Fund says the global economy is in a delicate moment, with 70% of the nations expected to experience a slowdown in growth this year. The managing director of the International Monetary Fund, IMF, Christine Lagarde, said the global economy is at a delicate moment. She, however, ruled out a global recession in the near term. The IMF boss blamed the slowing global economy on trade tensions and financial tightening. A look at the federal government bonds market opened on a relatively flat note, with slight demand on 2025's offset by sell pressures. Other maturities, average bond yields consequently remained unchanged at 14.35%. The market has maintained a slightly bearish posture in recent session, with some players still looking to take profit at current levels. We expect this trend to persist in the near term. The T-bill market traded on a slightly bullish note, with yields compressing marginally due to continued absence of an OMO auction by CBN and the improved system liquidity levels. At the interbank market, the Naira and US dollar rate remained unchanged at 306.95 kobo to a dollar. NAFEX closing rate in the importer-exporter window appreciated by 0.02% to 316 naira 60 kobo per dollar. At the parallel market, the cash rate fell back to 358.30 naira to a dollar, while the transfer rate remained unchanged at 364 naira. Let's now take a look at the exchange rates in the country. Nigeria hopes to localize its internet traffic by as much as 60% by 2021, after hitting 40% by the end of last year. The Chief Executive Officer, Internet Exchange Point of Nigeria, Mohammed Rudman, who said this, noted that the growth rate of internet traffic is a useful indicator of the health of the entire internet ecosystem, as well as in measuring the development of digital economy. Through localization of internet traffic by telecommunications operators and internet service providers has increased lately. Rudman believed that increased collaboration among stakeholders can actually bring the required rise in traffic. We now take a look at how commodities are faring in the global markets. With that, we come to the end of this edition of Business Express. You can access all previous episodes on YouTube, just as you can also communicate with us on Twitter, and handle is NTA News Now. Enjoy the rest of the week and join us on Friday for another package. I am Amina Nujaim. Thank you for watching.